Welcome back to The Boring Accountant. This channel is all about taking the boring parts of money, tax, banking, investing and small business and turning them into simple practical steps, especially for Kiwis running small businesses. If that sounds useful, consider subscribing so you don't miss out on the next one. Today we're going to be talking about the TSB and Heartland Bank merger, what's actually happening, why Taranaki should feel quietly good about it, and what it really means in the bigger picture for New Zealand banking. Hey Minnie! TSB started life in 1850 as New Plymouth Savings Bank. That's 175 years of local history. And since 1988 it's been community owned through what's now called the Toi Foundation. So when people in Taranaki felt a bit proud seeing this in the headlines, that was completely fair. So here's the deal. Heartland Group Holdings has agreed to buy TSB for $620 million and merge it with the Heartland Bank. The combined bank will be called TSB Heartland Bank Limited. Both names have been kept on purpose because both carry some real regional weight. Now, this matters. Nothing has actually happened yet. The deal is still conditional on regulatory and shareholder approval, with completion not expected till around the end of 2026 if the deal goes through. Your accounts, your branches, your online banking, nothing changed today. Here's where the local pride is well founded. I want to give its proper moment before the accountant in me kicks in. The Toi Foundation, TSB's owner, is going to keep a 17.5% indirect stake in the combined group and a seat at the boardroom table. It doesn't just get cashed out and walk away. But here's the real interesting part. The foundation's annual income from the bank is expected to grow from around 10 million to roughly 30 million once the merger completes. That's 3 times the amount of community funding that is going to be flowing back into Taranaki every year. For a region that is used to watching head offices drift north to Auckland, keeping a locally rooted bank and growing what it gives back, that's generally a good outcome. Now, the accountant's hat on. Even after merging, the TSB Heartland Bank would be New Zealand's 7th largest bank with only around 15 billion in New Zealand assets. That sounds like a lot, doesn't it? But here's what the market actually looks like. The ANZ Bank is still our biggest bank by a long way, and it sits around $213 billion worth of assets. The ASB, the BNZ and the Westpac are each around 130 to 140 billion of assets, and Kiwibank is about 43 billion. And then there will be the TSB Heartland. It's going to come in at about 15 billion, roughly 1/3 of the size of Kiwibank and about 7% of the size of ANZ. So this merger is not going to crack the big four. It doesn't even catch Kiwibank. It takes 2 small players and makes one slightly less smaller player. Now, that's not a criticism, it's just the honest scale of the deal. Now this is where it's going to get interesting. Running a bank in 26 is expensive in ways that have got nothing to do with lending money. Cybersecurity, compliance, technology platforms, anti-money laundering systems. These costs are largely fixed. They cost about the same whether you've got 100,000 customers or 500,000. Spread them across a bigger base and economics get a lot better. Heartland also brings in specialist products. It's well known for it in the reverse mortgage space, whilst the TSB brings full service everyday banking. So the two fit together pretty neatly. The realistic ambition here isn't to topple the ANZ. It's to build a credible local owned bank that competes hard on home loans, term deposits and regional lending. Think the Kiwibank model, just a size or 2 down for now. So potentially for Taranaki this is quietly a significant win. Local ownership in some way is preserved, the community funding is expected to triple, and we're going to get a stronger bank than either was on its own. As a national competitor, just keep your expectations measured. It's a meaningful step forward but not going to be a giant killer. And the deal isn't quite yet done. If you bank with a TSB and you're wondering what a bigger merged bank might mean for your mortgage or your rates down the track, it's a fair question to put to your banker when the time comes. If you found this helpful, hit like so more people see it, and subscribe to The Boring Accountant for simple practical videos on money, tax and business and banking. If you've got a question, just drop it in the comments below. It might just turn into a future video. Thanks for watching, and remember, when it comes to your money, understanding what's actually happening is always better than guessing. Till next time.